Hi everyone, this is Martin here, and welcome to the weekly recap. And I'm also going to throw in a few short lessons on trading strategies. This is for the week of June the 6th to the 10th, okay? And also going to take a look at the possible number of pips that were available for you to take in. So, starting here with the Euro USD. This is the daily chart, and you can see I mentioned in last week's video update, after this huge run up on the previous Friday, you can see that um, with this huge bullish candle right here, I said caution. Probably the best idea would be to wait for it to go a little bit higher to a the resistance area, then look for a bounce off of that and take a sell trade. And that's exactly what would have happened. And where were the opportunities? Well, you can see the very first opportunity was on Thursday's trading right here. This was a bearish engulfing candle. It completely engulfs the previous white candle. You can see that, right? Okay. And then you would have taken either a sell trade right down and there or just below the 50 SMA, let's say 5, 6, 7 pips below that, and you would have made around 60 pips. So that would have been a nice winner for you there, 60 pips. Based on that evidence alone, this bearish black engulfing candle that bounced off the resistance area here in the gray rectangle. Now, you could have gotten in earlier and made more pips, and to do that, for some of you who are trading the intraday charts, I'm just going to switch to the 4-hour charts. Okay, take a look right here. This is the 4-hour chart. So you can see after this huge move on the previous Friday, price was grinding its way slowly. You can see, look at all the small candles, small up and down candles, slowly, finally made its way up to the resistance area. And while it was going higher, this is what you've got to do. When price is going higher, draw a trend line below it, and you're looking for a break to the downside. So you're waiting for a bearish or black candle to break to the downside. Take a look below here. The histo bars are getting lower, smaller, smaller, smaller towards the zero. And you can see price going higher. The histo bars becoming lower. Let me just raise that up a bit. And what we have here is called negative divergence, a bearish divergence. So the idea being that the histo bars are getting smaller. I've drawn the trend line. They're coming down. The tops here are higher. Okay. Finally, we have a break to the downside right here, coinciding with the histobars getting much smaller over here. So, okay, and to do this properly, you would have probably, with this big black engulfing bar right here, taking a sell trade, pending sell order just below this 21. And if you would have gotten in there, that would have been good. See, pending sell stop order right there, that would have been good. Well, first of all, 34, 35 pips to the 200. If you would have stayed in a trade, 65, and right to the end, 95 pips. So it was good for up to about 95 pips. Okay. Next one, we get the British Pound USD. And let's take a look, see what's going on over here. I did say to wait for price to break above the 45.20, which is right here. With this candle, it did and closed above there, but that would have only been good for not a lot of pips, about 20 pips. And if you would have held on to the next day, that would have been a loss. So depending on what kind of trader, if you always close your trades at the end of the next day, if you're in a proper position, then you would have made at least 20 pips. However, price right away, you see this candle right here, that is an inside candle. It's bearish. And here's something that you guys have got to learn a little bit more is look for these reversals. This is a reversal, a pattern. We have a up candle, but you see the long wick on top. Sellers, so buyers brought this price all the way up high, really high, and sellers brought it right back down, almost halfway to the total market movement for that day. So this was the total movement from here to here, but sellers ended up bringing it back down. Sellers came in here again, another high, big wick here, showing indicating selling strength, and placing a sell stop order right below the wick of this black candle right there would have given you some pretty good pips, at least 50, 60 pips, and if carrying it all the way down further, you know, I mean, as much as 230 pips or more. So that was a good opportunity for a counter trend trade. Okay, and now we get to the Australian USD. Let's take a look here. Um, this is the daily chart for the Australian US dollar. And here, price last week went up and up and up. And what did I say? I said, uh, take a buy stop order, place a buy stop order above the 73.80. Well, here's the 73.80. You can see with the previous Friday, this price bar closed right here. When this price bar closed really high like this, it's a huge um, bullish bar indicating major buying strength. I did say place a buy stop order just above this level. You can check your notes, and I did say that. You would have made quite a number of pips, and that was good for about 79 pips. Okay, so that would have been a good winner there. Let's take a look at the LEOD. Same thing. You can see this candle closed above the top yellow line. The histobars were getting much smaller toward the zero, but the key indicator here is the RSI. You can see the blue RSI pretty almost above the 55 here, but well above the sentiment line here. So I would have gotten in at the open of the next candle right there, and you would have made your pips from here all the way up to there. So this is the LEOD, or lazy end of day trading setup. And again, always keep watching those charts, the LEOD, for clarity. They often are much easier to read and understand than just the price action charts. Now we go to the New Zealand USD. Last week, this was the big winner, okay? And you can see, I mean, an amazing week in total. It kind of went up for as much as about 220 pips or more. And last week, I did say uh, the close on the previous Friday, I did say in last week's video update, it went up too high, too fast, and I said, wait for a pullback. Those are exactly what I said. Wait for a pullback and then look for a TCE or a trend continuation with evidence. Well, let's take a look. We had this major run up on the previous Friday. I did say wait for a pullback. There's your pullback, right? Then I did say wait for a trend continuation with evidence. Okay, so see this next candle right here? This is the Tuesday's trading. Even if you were not there on Tuesday, it didn't matter. But after 5 p.m. or 6 p.m. or 7 p.m., whatever, or sometime 9 p.m. in the evening, sometime in the evening, you would have seen this candle close, and this candle was forming. But with the close of this candle, this is a bullish engulfing candle, completely engulfs the previous black bearish candle. It bounced off of a major support zone that's highlighted in the gray rectangle. You can see that. I would have gotten in right away at the beginning of the next candle, getting in there. And if you would have held the trade just for one day, okay, that would have been good for about 42 pips. If you would have kept the trade open till the next day, boom, all the way for as much as another 130 pips in total, okay? And so that could have been the big winner for you on that particular day. Really quickly, well, you can see uh, not much to see there. So that's how I would have played that one, and that was a good winner there. Now we get to the US CAD, and I'm gonna zoom in here because there's a good lesson. Um, I did say my bias was to the sell side, and with the Friday close right here, you can see that with this black bearish candle. I said I was looking for sell trades. My bias was to the sell side. So I would have placed a pending sell stop order below the 50, and that's what I mean. I'm going to zoom in now, okay, so you can see that. So here's the previous Friday, okay? So you would have you would have seen this at on the weekend or at the end of Friday. And then you've got to either understand that price is going to come back down and bounce higher, or price is going to blow right through the 50 and come back down lower. Now, you can see here with this swing high here, this is a lower swing high to this previous swing high. Okay, so we went up, down, up, then not as far as the previous swing high, down again with a huge, huge, huge bearish candle indicating selling strength. So if you want to be a little bit more aggressive, you would have placed a sell stop order right about there, okay? And in fact, I did say in my video update, you can place a pending sell stop order below the 128.70, which is right there. So I did say that in the video. And that's why it's important to watch my videos, guys, because I mean, I'm not always right, but I do give you some pretty good indication of the levels and areas I'm looking at. In this case, I did say place a pending sell stop order below 128.70. If you would have done that right about there, my goodness, that would have been good for at least 167 pips. That could have been a major, major winner there. Okay, so that's that pair. And now I'm going to go to the US CAD. That was US CAD, I'm sorry. US Swiss franc. I said my bias was to the sell side. I also mentioned to wait for a pullback, then look for trend continuation with evidence. This also was good for 118 pips, and I just want you to look at that. So here on the previous Friday, we had a huge major down candle. Sellers completely in control. Placing a sell trade below that would have given you at least these pips right here. Holding onto it would have given you a lot more pips, but um, there was not much of a pullback. You can take a look at see, this is the down movement. Here we had a sideways consolidation, and you can see there's a bit of a pullback there with a break. If you were looking at a 4-hour chart and you had the opportunity to do that, you would have seen this candle break the trend line, and then that would have been good for quite a number of pips. 157 pips that way. But basically, if you're just looking at the end of day charts, let me just remove that. If you're looking for the end of day, you would have seen this was the Friday, and then Sunday money trading. This is the candle that closed below the 50, and understand that once a candle closes below the 50, the bias really is strong to the downside. Here you would have seen below the MACD, the histo bars are also getting really close to and below zero, the zero level here. So I would have entered anyways without hesitation a trade right there at the end of the end of this candle, the open of the next one. So this is the Tuesday trading session, and that would have been good for at least 48 pips. If you would have closed at the end of that day, held on to it, good for at least another 116 pips, which is what I mentioned. Okay, and finally, last pair, really quickly, the USJPY. I said price, wait for price. It was coming, it was at support. Wait for pullback or take a counter trend trade, and that would have been a loss because there's the pullback. See, there's the U-turn. It basically it did not come down far enough to the support zone area. However, I also would have gotten in after this candle because I would have thought, well, perhaps this is a U-turn. I would have gotten in right there. And the next day, you can see there was a bit of a loss. The next day, a bit more of a loss. And I mean, if you would have held on to it for the next few days, you still would be in a loss position by not a lot. But the point is, If after 2, 3 days it's still going sideways, get out of the trade. Better to be on the safe side. So this pair would not have given us anything. Okay, and that's the end of this video. Hopefully, this has given you some good tips and ideas as to what to do when you're trading. If you have any questions, please feel free to email me, and I will answer all emails in a timely fashion and we'll answer all your questions. So take care, guys. Bye for now.